Hi everyone. Good morning, good afternoon, and good evening for many of us. This is Amit from CXOTV, and I very welcome means I warmly welcome all of you to this very interesting fireside chat today, wherein we have two special guests. Uh, One is Mr. Sundeep Mohindru, who is the CEO of M1 Exchange. A very warm welcome, and another guest is Mr. Saurabh Tiwari, who is the AVP-Marketing for M1 Exchange. Very
Hello.
warm welcome to both of you.
Thank you. Thanks, Amit. And good morning, afternoon, and evening to everyone from our side as well.
Sure. So let's start the conversation. I want to start with a very pertinent question. So if we look at the B2B Fintech space in India, so could you describe the current landscape, where exactly it stands, and how have B2B Fintech solutions transformed traditional enterprise finances practices that were being followed for the last many years?
No, you're very right. So, fintech landscape has completely evolved into a new avatar, I would say, post-corona, post-2020. And today, it has become like a normal business stream for the corporate world. When I say normal business stream, in the sense that the corporate world, the MSME world, they now consider fintech as a normal routine matter of availing the finance instead of the traditional way. So the adoption, therefore, has gone up multifold, and every enterprise promoter now is aware that he has rather multiple options of liquidity using a fintech versus using a single bank or a single NBFC. So you are very right; it has gone up multifold, and how people are using it is for accelerating their access to finance. That means the speed at which they can get their funding done through the fintech.
Yep.
Removing the constraints which are existing for them for getting a direct funding. That means collateral constraint, balance sheet constraint. Those constraints get reduced to a large extent, and also reducing their cost of doing business overall, because the cost of funding is much competitive using a fintech, and therefore that justifies the commercial model of using a fintech. So that's how the landscape in India has emerged today. So if I summarize, the adoption has gone up, and therefore it has emerged successful.
Very good. So what I would also like to understand, if you could throw some light on the latest trends that you observe in the B2B fintech landscape, means adoption by the businesses over the last few years. And are there any specific sectors or industries where B2B fintech solutions are having a significant impact?
Sure, Amit. So I'll correlate with our example. Let's say M1 Exchange, which is arranging the supply chain finance. So in terms of adoption, in 2017 to 2019, we were doing on an average about 1,000 crores per annum financing to these suppliers, which are MSMEs of their customers, which are enterprise customers. That means B2B enterprises. So an MSME giving goods and services to a large enterprise or a medium enterprise, we were doing about 1,000 crore per annum as a business in 2019. And now in 23-24, we are doing about 4,000 crores a month.
Very good.
Okay. So that means about 40,000 to 50,000 crore per annum as a number. So that's the kind of a scale up or an adoption which has happened in supply chain finance. And per se, in terms of value add, which in reference to your previous question that you were asking, why is this trend emerging? The value add which it is bringing is that the SME enterprise gets access to 60 banks and NBFCs on M1 platform. So by registering themselves one time, on the platform, that means doing their KYC one time, they get access to liquidity from 16 financiers. So their strength of taking finance goes up 60 times from their current programs. You see, so the value add is 60 times from their current program. So it's absolutely uncomparable. As a result, the competitiveness of the financing cost that they are getting is nowhere compared to what they are getting in a bilateral method. So in a bilateral method, for a bill discounting or for they would be getting anything between 15% to 22% per annum as a rate of interest. Whereas on a marketplace model, which is M1 exchange, they are getting anything between 7% per annum to 11% per annum. So it's a saving of 5 to 8 percentage points in their financing cost. So therefore, it is again very different value add that they are getting. The third point is when they are approaching on their own, they have to approach on their own strength. That means A, their own relationship with the financing bank or a NBFC. B, basis the strength of their financials, balance sheet, etc. Whereas in our model is completely flipped. It's the reverse. We are financing basis the credit analysis of their customer. So we are not constrained by how much collateral he can bring on the table. We are not looking at his collateral at all. We are not looking at the financial strength of the SME. We are only financing basis the strength of his customer, which is the information available with us in the public domain. And therefore, the scalability, the speed, the cost are hugely different in this environment, in this digital environment that has been created. It's a network. We call it a network. Why we call it a network is because you are getting access to 60 banks. You can do financing for any of your customers. So suppose any SME enterprise may have 20, 30 customers. They don't need to sign individual agreement for any of these customers. They can get it done for any of them. So therefore, it is operating like a network. That's how it is.
So, Mr. Saurabh, would you like to throw some light on the specific sectors or specific industries where B2B Fintech solutions are having a significant impact?
So, you're talking about the sectors. I would say that the sector financing sector is one, and then logistics also one of those sectors, wherein I would say B2B Fintech solution has played a different role, a completely vital role. Like even in case of, if we talk about how the payments have changed, B2B Fintech payments have changed. And like we take an example of, like Mr. Sundeep said, he just mentioned about the fact that what M1 exchange is bringing to the table, how they are making things much more accessible to the people, much more accessible to all the stakeholders, and how they're integrating and bringing all of them together through the fintech platform. This is what is being, I would say, besides other options, is something that we are looking for. And this is just a beginning. I believe we are just at the beginning, and there's a lot more to come in the B2B Fintech space.
Sure, certainly. So, Mr. Sundeep, I would also like to understand if we can share some figures on the current investments and the trends that are happening in terms of investments in the B2B Fintech space.
Yeah, so the B2B Fintech space in terms of the investments have been going on since last 3 years, actually, as a focus area for the investors. And mainly, whether it is open banking, whether it's supply chain finance, whether it is any kind of trade finance or B2B term loans, these kind of fintechs are getting a lot of investment. I would say majority of these fintechs are NBFCs themselves, because post the era wherein RBI has mandated that every fintech has to be not mandated. I would say the RBI has come out with regulations wherein it is beneficial for a fintech to be regulated. So most of the fintechs have become an NBFC. Very unlike wherein in M1 we are just a platform. We are agnostic to any bank, any NBFC. It's a marketplace wherein the price discovery mechanism is done between the client who is to take the finance and between the bank who has to do the financing. So the investments are going either in the platforms or in the digital NBFCs, I would say, in today's day and age.
Very good. Very good. So I would also like to understand that means if we talk about specifically M1 Exchange, so it is into the supply chain finance and invoice discounting solutions space. So how do you facilitate better relationships between businesses and their suppliers with your specific or maybe customized solutions? What kind of customer experience that you are delivering and how exactly you do it?
Yeah, and a very good point. So essentially, in who we are serving are two sides of the spectrum. One is a corporate buyer and one is a supplier. Now, both the corporate buyer and supplier have to see that this supply chain finance using M1 Exchange has to make business value add for their respective businesses. And if the liquidity in the supply chain is robust, then the overall businesses on both sides will become robust. So that's a no-brainer. Having said that, the cost of doing business has to be reduced. The businesses have to become competitive on a global arena. If India has to become a 5 trillion economy, the Indian businesses have to become competitive. And for doing that, we are reducing the cost of doing business both for the buyer and seller to the, like I explained you, to the tune of 5% to 10 percentage points on a per annum basis of their financing, in their financing cost. Now, if the cost of doing business is coming down for the supplier because of the goodwill of his buyer, automatically the cost of doing business for the buyer is coming down. Exactly. That is one point. Now, second is de-risking the business. Now, from a buyer side, if he is arranging the proper financing for his supplier, then he is de-risking his own supply chain. And if you look at it from the lens of a supplier, he is getting his payment within 1 day to 2 days of his supply. So he's also de-risked to an extent that he's not worried about collection. He's not worried about running around. He gets his payment within 2 days, and therefore he's able to invest more for the same supply, for the same order from the same customer. He's taking larger orders. So that's the one thing. Then the constraint for capital is completely removed. Like I said earlier, no collateral. This is your past data points. That means are you repaying on time? Are you delivering your quality goods well to your customer, and therefore your customer is approving the invoices based on your quality parameters? We are making available the finance. It's not dependent upon your balance sheet strength, on your CIBIL score. Such ideas are not there. Therefore, the constraints for both are fully evaporated. Right? And the liquidity flow, the volume of liquidity flow is, like I said earlier, is 60 times than you would have managed with one bank, because you're getting access to 60 banks. So the liquidity flow is 60 times higher. So with these parameters, the supply chain of any buyer and seller is becoming robust. We are seeing that earlier we had to sell ourselves to a large corporate for participating in a program. Mm-hmm. Now that the corporates have realized and witnessed, and therefore are open to try their hands on this, it's a reverse cycle. Now the corporates are advising us, we can bring more business on your platform. How much more liquidity can you bring in? And that is the reason when I said, when we were doing 1,000 crore financing in a year, we are now doing 4,000 crore in a month. That's the reason that this kind of adoption has gone up.
Very good. So, Mr. Saurabh, my question to you is that, are there any innovative financial models? Are there various financial models that you are working on in terms of your platform that is offering various supply chain financing and invoice discounting solutions? Okay. So are there any innovative financial models that you are working on? Would you like to talk about a few of them?
I think the invoicing, discounting, and the supply chain financing itself is one of those models that we have introduced in the M1 exchange post the RBI came into force. Besides that, when we are talking about the models, I would say one of those models is that how we are integrating the entire ecosystem. Integration in ecosystem, as in like we were talking about the ERP. Like Mr. Sundeep just mentioned about how we are bringing in large corporates and the MSMEs, all of them together in the one system. So how we are creating, I would say integrating the entire ERP solution and bringing all of them together in one ecosystem is making things much more easy for them. Not only it is making things faster, it is also giving people much more options, and which is then creating a lot more cycles for financing, which is available for the people. So integration itself, and this is not only something I would say out there, M1 Exchange, this sort of integration bringing into the system is something, it's a game changer sort of us for us also. And it's much more convenient for all the stakeholders as well.
Very. So, Mr. Sandeep, I would like your inputs on the technology, how exactly M1 Exchange is leveraging the emerging technologies like AI, blockchain, or maybe data analytics, or any other emerging technology that you are using, basically to make your platform more relevant, more unique for your customers. And are there any recent innovations on your landscape, on your platform, which you find particularly exciting or game changing?
Yes. So the latest one that we have recently launched under the regulated sandbox is the deep tier financing, wherein we have used data analytics. What we have done is that we have gone from tier 1 to tier 2 supplier. So when I say deep tier, so it is essentially we are going one chain lower. So far on M1 Exchange, we were discounting the invoices of tier 1 seller and an anchor corporate. Now, what we have done is that we have done data analytics on tier 1 seller, and whatever raw material he's buying from tier 2 seller, we have started discounting for their invoices also. Okay. And this therefore has enabled the ecosystem to enhance the financial inclusion to multi-layers. This is very new phenomena in the country. For doing this, we are analyzing the financial bank statements and the GST of the tier 1 seller, and basis his financial strength, we are sanctioning a credit limit to him, and basis which he's buying his raw material from the tier 2, which is getting financed through supply chain finance. So this is using data analytics that we are able to do this, and integration with various golden sources of the country, wherein bank statement analysis, GST, integration with all of this, we have enabled this as a product in the market.
Very good.
So that's the point.
Okay. So my last question would be around your outlook for this B2B Fintech landscape in India. So what do you see as the most promising growth opportunities and outlook for B2B Fintechs in the supply chain financing or maybe invoice discounting space over the next 2 to 3 or maybe 5 years from now?
So in terms of outlook, I would say that the data analytics is going to play a very major role, because in our country, the business is very widespread across the geography of the country, and this opportunity of digital means of financing is enabling that all this data is getting consolidated on the platforms, and this data can be very intelligently used to service the deep tier financing, like I just explained. So that is going to be one change which is going to happen in our country over the next 3 to 5 years, as the next step from where we are today. Second is, of course, usage of AI for customer experience, wherein though the processes are fully digital today, however, if these processes can be made more intelligent by the system itself, so that the number of clicks and the number of the time taken can be further crunched. Today, we are able to finance the invoices within few minutes of they coming on the platform. Can these invoices be financed without coming on the without the user coming on the platform? Is going to be the new outlook of the industry. That means the systems are integrated, the AI is used, and the financing is more automatic. In coming days, yes, such things will be playing a role. Blockchain is another area. We are using blockchain for duplicate check. That means if an invoice has been financed, it is not refinanced in the financial ecosystem of the country. So we are doing a duplicate check using a blockchain technology. This technology can be further enhanced for other use cases wherein smart contracts could be enabled, and therefore the buyer and seller are authenticated, and there are no chances of doing fraud or fake invoices. So this kind of model may also emerge in due course.
Very, very. So, Mr. Saurabh, would you like to add a bit on this? Means I would also like to understand your thoughts about this.
Okay, so I personally think that, like Mr. Sundeep also already mentioned about certain aspect of how things are going to change with respect to technology like blockchain, artificial intelligence coming into play. I still feel that blockchain, artificial intelligence, how they are bringing all the data together is what they are going to do. In terms of, like we're talking about the customer-centric approach, so having an understanding through the different tools that what are the customer's pain point, and then bringing out those pain points through a different solution, like M1 Exchange has brought in the solution of how it making it, access of financing easier for the bottom of the pyramid of the large number of people of the country. So similarly, what more things can be done once you implement artificial intelligence, blockchain, or predictive analysis? You get a lot more data points. Based on data points, you can understand that what kind of new products or the improvement can be done. And then that's going to make the larger impact on the society and onto the business.
Very. So thanks a lot. I believe you both have contributed very well to this fireside chat, and means very insightful discussions that we had today. So thanks a lot for your time. I believe the audience would really love this conversation. Thanks a lot.
Thanks, Amit, for your time.
Yeah.
Thank you for it.
For more updates from CXOTV, please like and subscribe to our channel.